Bitcoin at 200K? Possible. 400K? Still possible. 800K? Yeah, that's a real price model. And no, this isn't some crypto bro fantasy. This is coming straight from Morgan Stanley, who recently just published a full breakdown on crypto for institutions. 20 pages, full TradFi treatment. And for the first time, Wall Street's not talking just about crypto. They're running real models. In this video, I'll break down why they think Bitcoin could hit 400K, their surprising take on Ethereum, and what they still don't understand. Let's get into it. Morgan Stanley says investors look at Bitcoin through 3 lenses, and they're all bullish. Number 1, digital gold. Bitcoin is hard-coded scarcity. It's not just internet money. It's a hedge against inflation, fiat debasement, and basically central banks going brrr. Number 2, disruptive tech. Bitcoin and Ethereum are like the early internet. They don't just compete with currencies. They compete with the entire financial system if you really look into it. And number 3, diversifier. In a traditional 60-40 portfolio, even a small dose of Bitcoin strategically improves performance. Less correlation, higher upside. Here's where it gets spicy. Morgan Stanley is using 3 real-world models to value Bitcoin. Let's start with the one you've heard before, Bitcoin versus gold. If Bitcoin ever equals the gold held by governments, just that, it puts Bitcoin at 200,000 per coin. We're pretty close. If it matches all gold ever mined, the price goes up to $1 million per coin. The second model, Bitcoin as reserve currency. Right now, global reserves are full of euros, dollars, yen. If Bitcoin takes even a 5% share of that, like the pound or yen, the price targets go wild. And I'm talking like 800K per coin. The thermal cap, price to book. This one's one I've actually mentioned in a short before. Think of it as Bitcoin's price to book. You know, you Wall Street guys will understand me. It adds up how much money has been ever spent mining Bitcoin. Again, kind of like book value. Right now, Bitcoin's trading at 29x thermal cap. But in past bull markets, it went up to 74x. Where does that put Bitcoin's price at? 327,000 per Bitcoin. And again, this is not me saying it. This isn't some crypto bro saying it. This is Morgan fucking Stanley saying it. So yeah, do what you will with that info. This report isn't just about price. Morgan Stanley has told us that Bitcoin actually follows season. And right now, we're in crypto summer, according to them. Spring was last April, 2024, you know, around the time of the halving, which is when we're supposed to come out of the bottom. Then comes summer, which is again the halving, and when Bitcoin reaches first all-time high. The fall, where we actually saw in November, October, early December, the peak of the hype and everything. And then came the winter collapse. We all know what happened in January. And this cycle is actually repeating itself, according to them. So right now, we're in crypto summer, the most explosive part of the cycle, the run up to new high. And as I already explained, we know what happens in fall. They also break down Ethereum, and it's a mixed bag. More potential, yeah, but also more risk. The bull case, Ethereum's float, their circulating supply, is actually sinking. This is due to stakers locking up their ETH and the fees burn supply. Then we have the fact that it actually powers smart contracts, and most of DeFi, NFTs, and layer 2s are still run by the powerhouse that is Ethereum. And this is a way bigger addressable market than Bitcoin as a store of value. And finally, in Ethereum's case, unlike Bitcoin's, miners don't need to sell because they're not miners. They're stakers. However, they also talk about a bear case. Ethereum is also a lot more centralized, of course. 50% is staked, 60 wallets, believe it or not, hold 18% of the supply. That's not exactly DeFi utopia. And let's be honest, it's expensive. Ethereum gas fees are still pricing out the normie, which is why Solana's having such a good run. So much more accessible for people. Finally, and a big plus, is that DeFi and NFTs are just a magnet for regulation. So here's the takeaway. Wall Street is no longer ignoring crypto. They're modeling it, they're pricing it, they're even allocating to it. 200K, 400K, 800K, those are scenarios they made up, not hype. But you know what the one thing they can't model is? How fast retail FOMO moves and how conviction spreads in this industry. They have no idea how fast this next cycle can heat up, and in turn how fast these prices can just move. So yeah, tell me, what do you think is more likely? 400K or 40K? Don't forget to leave a like, subscribe, and yeah, I'll bring you more videos like this in the future. I'll try to break down. As we've seen, Wall Street and institutions are really interested. Last time it was Coinbase institutional, now it's Morgan Stanley. Bank of America is probably going to come next. I have a video on that actually. I'll release it soon, so don't forget to stay tuned. So yeah, that's all for this time, boys. Again, don't forget to subscribe and leave me a comment. See you on the next one. Later.